If we understand what's happening, I think we do, we're going to stay on the right side of this. We just got to ride this out. I don't see anything major here. It's not an epiphany that we're having issues in the yield curve. I mean, I'm not surprised. I don't think you are or anybody else. This is just a reflection of what is going on despite the propaganda. Period. The end. I pretty much am ignoring it. I'm focusing more on the 10-year yield, and right now I don't see any red flags anywhere. I think the market is going to continue to get propped up by more debt, and I think oceans of it are coming, much more than we've ever had before. So that's my take on what's happening with regard to the yield curve. I've been telling my people, just don't worry about it at this point. I don't see anything going on.
So do you think that debt, that ocean of debt that you're referring to, that's going to come through more government spending? Are you talking about the sovereign balance sheet or the corporate balance sheet or the consumer balance sheet, or what do you think?
Well, I think from right at its core, it's central banks who are going to continue to fuel it. They have to. You know the mechanism here. It's very, very simple. They must continue to inflate. They've been doing this since forever. They're not going to stop. It's the mechanism to continue the debt-based economic model from functioning here. People are obviously, consumer debt, household debt taking off like we've never seen before. Inflation is skyrocketing. It's a very, very bad situation for people. Unfortunately, people are being pressured from every possible direction, and then some. And in my view, I don't see an end in sight here. I don't see it, because I don't see the mechanism changing at its core. It's going to continue the way it goes. It's going now. I just until we hit that climax here, the grand finale is, to me, and I would imagine yourself, is the debt market. The debt market is going to implode. I don't know when. I don't even care when. I really don't. I'm just taking advantage of things as I see opportunity come along here. I think the fact that this is being prolonged, like every other crisis is, gives people who have a few functioning brain cells the opportunity to get themselves on the right side of it before we get the implosion in the debt market, which is going to wreck the stock market. And then we're just going to see cash move from one set of assets into another. And we're already seeing it to a certain degree. We've seen commodities take off, although we have had a big pullback recently. But I think that's just a temporary, that's the way the market works. No asset class, no asset goes straight up without a little drop or a big drop, and you get a new floor and then we go higher. Because the debt is going to continue to inflate. That's the core. In my view, I look at things this way. I look at the debt market as the driver of everything. Now, because the debt market is the largest part of the market by exponents, everything derives value from it. So we have a debt market hyper bubble, which is out of control. It's going to get much, much larger, faster, I think, than we've ever seen before. We're going to get other assets continue to inflate, and certain things are going to deflate. For example, we're seeing the absolute value of the dollar crater. It's going to continue to crater, unfortunately. And I think it's by design. It's a mechanism. I think we all expected this to happen, although I do expect the relative strength of the dollar to stay high. And it has. It will. For the foreseeable future, unless some other massive force acts against it. And that would be, obviously some kind of a world war maybe, or something along those lines.